Imagine becoming a billionaire, not by inventing a revolutionary product, becoming a movie star, or winning the lottery, but simply by investing patiently for decades. Meet Warren Buffett, the man who turned ordinary decisions into extraordinary wealth and became one of the richest people on earth. But here's what most people don't know. His journey didn't begin on Wall Street. It started with a 6-year-old boy, selling chewing gum door to door. Stay until the end because the habits that made Warren Buffett a billionaire can be applied by anyone, no matter where you start. Warren Buffett was born in 1930 during one of the hardest economic periods in American history. Most children dreamed about toys. Warren dreamed about making money. His father was a stockbroker, and young Warren became fascinated by business long before most kids learned multiplication. At 6 years old, he bought packs of Coca-Cola and sold each bottle individually for a profit. He sold magazines, chewing gum, golf balls, anything that could generate even a few cents. To Warren, every coin represented opportunity. While other children spent money, he counted it. At just 11 years old, Warren made his first investment. He bought 3 shares of Citi Service Preferred for $38 each. Then something happened that almost every new investor experiences. The stock price dropped. It fell to $27. Most people would panic. Warren waited. Eventually, the stock recovered to $40. Feeling relieved, he sold and made a tiny profit. But then, the stock continued climbing. Past $100. Past $150. Eventually reaching over $200. That painful lesson stayed with him forever. Sometimes the biggest mistake isn't buying the wrong stock. It's selling the right one too early. As Warren grew older, he wanted to understand one question. Why do some businesses become incredibly valuable while others disappear? That search led him to Columbia Business School. There he met Benjamin Graham, a legendary investor known as the father of value investing. Graham taught Warren something simple. Don't buy stocks. Buy businesses. If the business is strong, if the management is trustworthy, if the company has long-term potential, then temporary price drops become opportunities, not disasters. That idea would shape Buffett's entire career. Instead of chasing quick profits, Warren focused on patience. He searched for companies with real value. He ignored market noise. He stayed calm during crashes. Year after year, decade after decade, his investments continued growing. Eventually, Buffett transformed Berkshire Hathaway from a struggling textile company into one of the largest investment companies in history. The secret wasn't luck. It was discipline, consistency, and time. From selling chewing gum to becoming one of the world's wealthiest investors, Warren Buffett proved that wealth isn't built overnight. It's built through patience, knowledge, and thousands of smart decisions repeated over a lifetime. And in the next part, we'll uncover the investment philosophy that made Buffett billions and why millions of investors still follow it today. You won't want to miss it.